Are there more people who could tell me more information about Taylor Swift or the stock market in general? Actually, I'm kind of not kidding. Um, I actually think it might be Taylor Swift. I would actually be willing to bet. All right, what's up, everybody? I'm back. And not a lot going on in the market this week, right? Might have to make it up. Inflation and tariffs, volatility. I went to McDonald's just now. This is my inflation report. I went to McDonald's just now. Do you know how much my large Diet Coke just cost? $2.59. $2.59. You know how much that thing cost like 18 months ago? 99 cents. That's inflation. I'm feeling it. Okay, whatever. So, the past week, we had the greatest degree of market volatility since COVID, right? Yeah, we had like 18 months where the market kind of sucked in 2022. And then people kind of forgot about it because it was a slow, long drawdown. And then 23, 24 were great. And plus 2021, the end of 2020, those are all fantastic. You know, life is easy. Okay, the market's taking a dump, goes straight back down. People freak out. We haven't seen this in like 5 years. Did you all forget? This is how stocks act. Some of you might not be fit to own stocks, and you're learning that now. I saw this week, and I thought it was kind of interesting. Somebody was talking about how, if the market goes down, okay, who are the people who are impacted by the market coming down? The people who own stocks, okay? Like, duh, right? The thing is, who owns stocks? Well, the vast majority, the absolute majority of people who own stocks are people who have money. Now, that might seem like an, oh yeah, duh, like that was a really stupid comment type of thing, but just hear me out for a minute. I think something like 88% of the stocks in the world are owned by the top 10% of wealth. Okay. Mind you, I don't know how people measure this stuff. So I could just like make up numbers and I might as well be basically close, right? So basically all the stocks are owned by the top decile. And then if you look at the bottom half of wealth, basically those people have debt, net debt, we'll say. So if you look at a market that was behaving like last week, where it goes straight down, and mind you, the 10-year Treasury is just plunging as well. Market prices come down, stock prices come down, interest rates come down. That means that the rich were paying their form of tax, their asset values are coming down, and the poor people who owned all the debt are getting their interest rates cut. Did anybody else say that, or is it just me? I don't know. Maybe there's just a lot of noise. Whatever. I don't like to think about the market. It's my job, but I don't. It's mostly just noise at the end of the day. If you're not going to sell your stocks for 20 years, why does it matter? Oh, I'm complaining about the price about this thing that I wasn't planning on selling anyway. Who cares? You buy a house, you sell it the next week, somebody makes you an offer the next week for 20% less than what you bought it for. What would you do? You'd say, no, it's worth what I paid. Okay? Why is the stock market any different? If you bought a stock 2 weeks ago, would you sell it now for 20% less? No. Why? You bought it because you thought it was worth what you paid. Whether or not you actually like intellectually acknowledge that is completely different, but you vote with your money. You make decisions with your money. If you bought it, that means you thought it was worth that. So it might be worth that again in the future too, by the way. Probably will. This one's a little different, this little bout of volatility, because, in COVID, which is like realistically the last time that we saw something like this, and for a lot of people, it was the first time that people had their eyes open to what the stock market was, right? For some reason, during that period of time, It was pretty much COVID, George Floyd, and the stock market. That was like pretty much the only thing that people could pay attention to. Like nothing, you didn't have sports, right? You couldn't go hang out with your friends. You can just trade online. That was the only thing that was open. It's the world's casino. So everybody got like infatuated by the stock market. Now, most people kind of just forgot about it since then, and it went back to doing its normal thing. But a lot of people's eyes were opened to the stock market. And now there's a lot of people who only pay attention to the stock market when something like this actually happens, right? Like they completely forget that we had what 25% 2 years in a row in the S&P 500 the last 2 years. No, they didn't hear about that. That didn't make the news. That wasn't fun. They just hear about these market volatility events. And the only thing they're constantly hearing from the news is when the market's dumping. You get these 5-year events every 5 years. That's the only time you pay attention. In COVID, we kind of get away with it. You could kind of get away with it because if you just like walked outside and looked around during COVID, the world looked different, right? The world was a very strange place in March of 2020. March 23rd, 2020 is when the market bottomed. The world was a very different world than you and I were used to on that day. If you were to walk around outside, it looked different than it was supposed to. People could kind of rationalize why the market was taking a dump. People kind of understood that there were things that were different than just the stock market. They weren't so concerned about the stock market because, I don't know, everything they thought they knew about the entire world was kind of blowing up in their face. But look at the world today, right? We've kind of gotten used to this post-COVID universe. We're 5 years after that. Isn't that wild? That's half a decade. Okay? People have gone to high school and graduated high school in that period of time, or they're about to graduate high school. Isn't that insane? Isn't that insane? And if you are a normal person today and you were just to go take a walk, what would you see? The world looks the same as it does any other day. There isn't just a rational explanation for the stock market going down. March of 2020, take a walk, the world's on fire. The world's a zombie land, whatever it was back then. Okay, you kind of understood, well, maybe the market should be going down because everything's kind of weird right now. You go outside today, what do you got? I went to a restaurant on Friday. It was packed out. 2-hour wait. Nobody gave a shit that the market had been down 10% the last 2 days. And so if you're one of these people who is a stock market watcher, it's kind of hard to make sense of. It's kind of weird again. There's this dislocation between the stock market being goofy and the world being kind of normal. Yeah, tariffs and inflation and interest rates and, all these things. But the world doesn't really care about that stuff. Like, I don't know what the total addressable market of like attention span that the world has for just financial markets in general, but I'm pretty sure it's like not nearly as big as, I don't know, Taylor Swift or something. Like, how many people care? That's an interesting comparison. Are there more people who could tell me more information about Taylor Swift or the stock market in general? Actually, I'm kind of not kidding. I actually think it might be Taylor Swift. I would actually be willing to bet because like I went to college. I did. And when I went to college, mind you, I went to like a good college, I think. I don't know if I learned anything, but I went there and I literally didn't check the stock market once. Like I couldn't have told you anything about the stock market. I went to this restaurant on Friday. There's all these, frat looking boys in there dressed up for something. And I was like kind of standing in the corner just looking at them thinking, do any of these guys have any idea? Like they just have no idea. They don't care. It doesn't matter. And maybe there's something good about that. Maybe we should all kind of be like that. If you're listening to this, clearly that's not you. because you're listening to a podcast that's called Soup of Wall Street, which clearly means you're interested in some capacity about what's going on in the world of financial markets and economies and business. Or maybe you don't. I don't know. Maybe you just randomly found this on YouTube. At any rate, the world, I don't actually think cares. And this might be the first time in a long time where we're going to get a universe where the market coming down is going to be like the first thing that's going to start some sort of wave of, I don't know, societal change, if you will. Like the market took a dump in COVID, okay? The market got cut in a third in 30 days. That's like a lot very quickly. That was unprecedented. It had never happened. But it wasn't something that was started by the market, right? That was an artificial event, if you will, that spilled into the market. It was not a breakdown of fundamentals, market fundamentals. Earnings weren't deteriorating. No, it was COVID, and then the market crashed. Now we're getting into the scenario. Yeah, okay, maybe there's tariffs or whatever else is going to be happening, and that might still be an artificial event, but it's spilling. Like the first logical like order effect here is that the market comes down. And then we might see what the second and third order effects are of this happening. And it hasn't happened since literally like 2008, where there was a widespread like financial change that really was spurred by the stock market. I mean, we had 2021 was almost the opposite, where there was so much like free money, basically. Like you can just like throw a dart at a wall and the market went up and like you could double your stock in 2 weeks. That was kind of weird too, in a different way. And that probably created a lot of really bad behaviors. But now we're in this place where maybe the market's going to be down for a prolonged period. Maybe it won't be. I have no idea. You know, who knows what's going to happen? I mean, I can guess. But we might be in this place where the market change might actually drive changes in the greater, I don't know, society. Culture shift based on the market. Maybe it's real. Maybe people won't be able to buy their Taylor Swift tickets anymore. Mind you, a lot of things have gotten like egregiously different in price. Can I just say that too? In like the last 6 years, like, pretty sure a margarita at this restaurant I was at, you guys know where I'm talking about. Well, some of you do. Okay. I'm pretty sure it's gone from like $8 to like $18 in the last 5 years. Why did that happen? Basically because the market went up. I mean, I'm simplifying a lot of things here, but I'm telling you that's actually why like the cost of a margarita has doubled. That's why inflation's been a thing for a lot of consumer sort of luxury type things. Yes, I would call like a margarita or a cocktail a consumer luxury item. A lot of that stuff has gone up basically because that's spent with people's extra margin on their lives, right? The more money you have, the more margin you have in life. The people who have the highest margins are the people with the most money. It's just true. And so does an $8 or a $16 margarita make a difference to them? Not really. Is that going to come backwards though? I don't know. It's hard to give that up once it's happened. Maybe we're like due for a nice 50% pullback and keep it there for 5 years. Maybe. I don't think that's really practical. There's just some structural things that are different. 401k participation's at the highest rate it's ever been. So there are built-in institutional buyers, dollar cost averaging in index funds on a weekly basis at a greater rate than there ever has been. So there's kind of this default buying pressure to just keep buying the S&P kind of no matter what. So maybe that just keeps the market up. I don't know. But it's kind of a weird vibe shift. World is normal, market's tanking. What's going to happen next? Who knows? Interest rates might get cut. I don't know. I don't know how I feel about that. But it might happen. This could be easier to borrow. The government certainly would like for that to happen. If you look around, you can find some statistics on the internet which say that for every 1 basis point that the 10-year Treasury falls, 1 basis point saves the government $1 billion of net interest expense on their debt annually. What is this administration's number one objective? To reduce expenses. So there could be an ulterior motive to all this stuff. I don't know. I don't work for the government. They don't call me. I'm just a guy on the street calling it like I see it. Okay. I will say this has been kind of an interesting year too, because you're seeing kind of for the first time this idea of diversification sort of working. Hello. You've had 15 years where the only thing that's worked has been U.S. large cap stocks, S&P 500, NASDAQ. Nothing else has come even close. If you owned anything other than NVIDIA, you were behind. Now, all of a sudden, it's like a vibe shift again. Bonds are up when stocks are down, like they're supposed to be. 2022, we had a terrible year, the worst year of all time for the classic 60-40 portfolio. Bonds were down double digits like stocks. Not supposed to happen like that, okay? You're looking at a scenario this week now where, last week, market down, S&P 500 down 10%, bonds up like 1. That's what's supposed to happen, okay? So there is kind of a return to some of the basic fundamental academic stuff you're supposed to be doing in keeping a balanced portfolio. International stocks are beating the U.S. for the first time in a while. I could argue that a lot of the pullback prior, at least to last week, was basically just large cap stocks coming back off of their insane valuations, just a standard reset. Now, clearly, there's some artificial things in play. I don't know. The market could be up like 5% today. I haven't even checked at this point. It could be up 5%. It could be down 5%. And nothing ever has anything to do with fundamentals. So cooler heads will prevail. It's how it always goes. And we'll just carry on. So, I don't know. Maybe things will be cheaper. You thought about that? Maybe some random things will start being cheaper because nobody can afford anything. I did see a take the other day that was like talking about these tariffs. Because, okay, here's the idea. Very simple. And, okay, I'll just tell you guys how I think about this stuff. The basic idea is that if I stick a tariff on something that's imported, that we have to go get from somewhere else, and I don't stick a tariff on something that we made here, I'm not going to tariff something that's like domestically produced. The idea is that the consumer then has a choice to either purchase something that is made here at a lower cost, all things equal, or purchase something that was made somewhere else at a higher cost. And it's going to incent the American consumer to buy things that were domestically produced, which will incent companies to onshore all of this manufacturing, yada, yada. That's like the gist, the very basic gist, okay? And I saw this take, and I thought it was very stupid. So I'm going to tell you all about it right now. And it said, no, that's not how it works. If Fiji water is $1.25 and Poland Spring water is $1, because Poland Spring's made in America, Poland Spring's just going to increase their prices because they can. And I was like, and this was from like somebody who you would classically consider a smart person. I've heard the term IYI, intellectual yet idiot. An overeducated person that actually doesn't know anything about how the world works. Because if you know anything at all about how the world works, the consumers, what do they purchase? They purchase the cheapest, best alternative. Always. Almost to the penny, by the way. And anybody who's ever studied consumers in any mass capacity will tell you that the consumer will always buy the cheapest option as long as it works. They will always buy the cheapest option. And what is the point of an efficient economy? That you have so many producers creating so much supply, fighting over this demand, that they will battle to the ends of the earth to get to the cheapest product possible so that they will sell more units. Okay? So if you have a water bottle that's $1.25 and another one that's $1, they will not just raise the price. That is not how it works, because somebody else is going to decrease their price, and they will take the subsequent amount of market share. Okay? That is how everything works. Now, I'm not saying that, by the way, this tariff idea is going to work the way they say it's going to work, and I don't really know. Like, my basic guess is it's probably going to go away in a few weeks, and like we're going to forget about this. Sorry. But to be like so like dumb to say that, oh yeah, everybody's just going to raise their price even if it was made in America. These are the people making decisions for our country, or who could be in a capacity to make a decision, we'll say. And that's their take. That's the opposite side's take, that oh yeah, everybody's just going to raise their prices. People believe this. That's like like, look at Walmart for a second. Do you guys know how Walmart makes money? They buy stuff, they mark it up like 2 or 3%, and then they sell it. Do you know how that business model works? Only if you can sell $500 billion worth of stuff a year. That is literally the only way. And mind you, if they were to sell 2 or 3 or 5% less stuff than they used to, eventually they would go out of business, because there ain't a whole lot of margin in that game. Now, when you do it on $500 billion, yeah, sure, it's a little bit of a different animal. But I can guarantee you they are absolutely optimizing for volume. How do you optimize for volume? You have to price it correct. And I can guarantee you that they're not just going to raise their prices because somebody else will undercut them. It always happens. This is America, guys. It's 2025. Like, we don't, like, it's just impossible. Okay. It's just, there's not going to be like a straight like sales tax on the, oh my God. Now there's some things we can't make. Okay. Like probably some random fruits or something. Okay. We'll have to figure out a solution for that. Maybe. I don't know. I sound like an apologetic. I'm really not. That's the thing. I'm just not an idiot, I think. I mean, you guys might think I am. I don't really care. Go buy your Poland Springs water or Fiji water. I don't care. They kind of taste the same, I think. Oh, just so many freaking idiots, dude. Golly. Okay. I think I have to be done now. I hope you all are well. Enjoy. God bless. Thank you. Good night. Or good morning. Have fun.